Hi, it's Joel. So coming out with another variable rate update, and it's getting summery, so I'm outside and enjoying what's going to hopefully be a really great weather for the next little while. But hey, you don't want to know about the weather. You want to know about what your variable rate is doing and what to be aware of going forward here. So look, as mentioned in the last couple of videos, we've seen the housing data from April, and it just continues to come in where we're seeing, pretty major plunges in house sales. And now the data is that it's slight, but about a 1% drop in housing prices in April. So every single week we see more and more data that the recent rate hikes have made a meaningful impact on the market and slowed things down. Now, we haven't not seen a situation where they're saying they're not going to continue to increase rates a little bit, but you are seeing a lot of talk where they're saying, hey, there is probably an end to the rate hikes very soon. Particularly to be aware here is that what they're trying to accomplish is what's called the neutral rate. The neutral rate is not a firm rate, but basically they want the rate to be neutral, where it is not causing excessive activity. So when people talk about the idea that rates go up with inflation, it means, hey, we think that low rates are stimulating too much economic activity, and so it's putting price pressure on things, but also that rates are not high enough that is discouraging investment and creating a recession. So it's a fine line they walk, but lots of talk about that already being achieved. And so June 1st is the next meeting. So we know that that's when the next time they can move the rate. I wouldn't be surprised if this is all kind of back down by that point, and we don't even see a lot more rate increases from that perspective. I also think it's reasonable to assume they could increase the rates, just knowing that this would be their last opportunity to do so, with the idea that they have to decrease them going into next year. I myself I just pulled up a purchase contract, and I think the client ended up getting it for $300 less than what the original list price was. So definitely some movement and changes to the marketplace. The last thing I want to leave you with today is that I feel like there's really two things that can be concerned. First of all, I'm always surprised the amount of people that ask us about home equity lines of credit or home equity loans. And worried about variable mortgages. You do realize that a line of credit is also a variable product, fluctuates in the same manner, and that's actually an on-demand loan, so they can actually pay it off anytime. It's a riskier product, even though people seem to gravitate towards it. So that's something to be aware of. I think it's very reasonable with what's going down that you think about repositioning yourself. Now is a good time to look at refinancing, getting rid of debt. There is some new products in the market that enable us to do some second mortgage products that mean that you don't have to actually break your mortgage, which didn't exist much previously. Normally we would have broke your mortgage to be a lower rate, but with rates being higher, could we get something into a lower range? The other thing to keep in mind right now is that how the securitization of mortgages work is that it means that, like, when you have a situation where you've done a refinance means I've pulled equity out to, I owed 200, but I wanted a mortgage for 300, so I increased the size of mortgage. That's called a refinance, and that's the most expensive loan for a lender to do. Now, here's a real big hack and trick. If I take that loan that I refinanced and I transfer it to another lender, that is a much cheaper loan to do. So if you've done a refinance even in the last year, your rate could be higher. If your rate is prime minus 50 or prime minus 60 or whatever it is, those are even the rates we're doing today on a refinance. So you could come to us and we could pay out the penalty for something better, like almost 0.5% difference. So that is something to keep in mind as well. If you haven't had a chance to go through your mortgage options with me or talk about your mortgage, even if you're like, Joel, you're a nutcase and I'm going to lock in, let's have a chat about that. Have a great week. We'll talk to you soon.